good morning, good afternoon, and good evening, because I know from the list that we have that there are people joining us from all over the world. So that's really great to see. My name is Caroline Schwepp. I'm the Senior Strategic Advisor for Viridian in the area of insurer solutions and insurance solutions. And I'd like to welcome you today to our webinar where we'll be discussing, and I will make the introductions to Drew and Zahir in just a moment, where we'll be discussing the challenges facing the insurance industry generally. We know that there's lots of problems around the management of the digital adoption curve, and more specifically, the pain points around streamlining the commercial underwriting process. I'm joined today by Zahir Huda. Zahir leads the North American business for Cytora. And Cytora's platform is transforming the underwriting practices for global insurance companies by digitizing and optimizing manual risk workflows, always those pain points, and seamlessly capturing submission information, integrating data, and ensuring that underwriters only receive the submissions that are ready to quote. So ready to quote submissions is always the key. Drew Doherty is Vice President of Commercial Growth for Viridian. I'd like to welcome you, Drew. Viridian is an AI-powered data company that captures the digital identity of 90 million businesses around the world. And that platform is growing daily. Viridian acts as a validation data layer in the underwriting workflow and helps commercial underwriters improve the accuracy of their underwriting while enabling them to really remain focused on the process at hand, which is the trusted risk advice, and becoming more efficient, making the customer experience more friendly and more efficient. I'm happy to say that Cytora and Viridian have partnered together to deliver state-of-the-art validation and enrichment solutions in the Cytora platform within the workflows that have been designed to support underwriters by removing the manual processes around commercial underwriting, allowing the underwriter to deep dive into the risk at hand. So that's my introduction. I wanted to make sure I followed my notes. We all know I tend to get off track. And before we get into the meat and potatoes of the discussion, I just want to ask Drew and Zahir, did I miss anything in that overview? Is there anything you'd like to add? We do have some pre-planned questions. And I'd like to remind the audience that the chat line is open and we will try to get to as many of those questions as possible. Where it makes sense, we'll dive into the question right away. And where it doesn't make sense or where we think it might be better placed at another part of the conversation, we'll try to remember to deliver that question back. But Drew, Zahir, anything to add on anything I've said? I think you're on mute, Drew.
Yeah. Nothing to add on my side, Caroline. That's okay. Perfect. Yeah.
Okay, so let's start with you, Zahir. We're talking about automation process, and we know that the holy grail for automated commercial lines is really levering as much information and automation as possible to drive these efficiencies that we've just talked about, helping to improve the workflows. During the course of your discussions with your client, can you provide an overview of what Cytora has uncovered during these discovery processes and what the problems are the carriers are asking you to solve?
Yeah, of course. Again, thanks for hosting. I'm excited to be here. And I hope folks can get some insights out of this discussion about how we bring kind of data and platforms that drive digital risk flows together. So to your question, so for some context, right, we know that underwriting commercial processes are quite manual and complex, right? And that is the basis of this discussion and where Cytora plugs in, because the implication of those complex manual processes are productivity for the underwriters, suboptimal, broker service gets implicated as well from longer turnaround times. So what Cytora is doing is working with each of these global carriers to find out what that manual flow is today and to be able to shift that to a digital risk flow. And what a digital risk flow essentially means is only deploying human intervention when it's absolutely needed. So why a carrier would come to us, Caroline, as you asked, right? So there's three reasons that we would say when they want to work with Cytora. First one is freeing up underwriting capacity. And that will help improve productivity for the underwriters so that they are only focusing on the areas that need underwriting and need their mind share. The second area is accelerating the workflow to be able to improve broker responsiveness. And as we all know, the faster you turn around to the broker, the higher chance, higher likelihood of binding. Then finally, once the underwriter gets the decision itself, how do we improve the decision quality? And that in turn will drive better risk selection. If we step back again, the whole objective that we work with carriers on is to enable an operating model where the underwriters, as you were saying, Caroline, in the intro, are only working on the quotable, decision-ready, and portfolio-enhancing risks.
That's that's really great. Now, Drew, you've been talking to underwriters. You've been talking to underwriters about these workflows, and they've shared many of the pain points around these workflows. And what we're hearing right across the industry is many of the pain points are the same. So perhaps I could ask you to kind of add to what Zahir is talking about in terms of the themes that have guided the conversations for all of the industry vendors within the commercial line space, and what we're hearing generally around the problems that require solution.
I wanted to pick back up on Zahir's last point, actually, thinking about, the experiences we have working with carriers and MGAs and brokers. What are we learning? What are we seeing? And Zahir's last point had to do with really the journey towards making confident decisions and how the Cytora platform helps guide transactions and that decision-making process. What we see in the world of data are the characteristics of the decisions, the characteristics of the data that is being used to drive the decisions, things like speed. Are decisions being made in keeping with the modern expectation for a digital experience? Frankly, most often, no. Decisions are still taking quite a long time. So we have this orientation towards a desire and ambition for speed that's not being realized today. We often run into the question of accuracy. Is my underwriting accurate enough? And usually in commercial, the most common reference to accuracy has to do with things like industry classification. So we quite often talk a lot about that and the importance of getting that right. Of course, ultimately the results, the effectiveness of the underwriting. Are we experiencing premium leakage in our portfolio? I guess to a layman like myself, another way of saying is, do we get it right? And of course, trial and error indicates that there's room to improve there. And I think the last thing I would just mention quickly is consistency. Are we applying a similar level of due diligence at point of renewal as we do at quote to bind? And if we're not, how can we carry that thought process, that due diligence, that decision-making through to that point in the journey as well? So those are the areas that we touch upon, all of them having to do with decision-making, back to the point that Zahir referenced in his comments as well. So a lot of commonality here.
Yeah, and I think that's what we're all seeing as we're having these conversations. Zahir, you talked about the challenges that you're helping carriers to solve.
Yeah.
How are you helping the carriers to solve? What benefits are you seeing? So maybe what we could look at is what are the pain points that are really critical right now, and data hygiene and data cleanliness is a big part of that. But when you're actually working with these carriers, what are they seeing the benefits? What benefits are they seeing?
Yeah. So Drew, as you mentioned, I think there's a lot about how do you drive consistent operations, right? So what are the times that it does have to hit the underwriter? Are those reasons consistent, right? That something wasn't found on the broker form, it could not be found on a third-party data player like yourself. So I'll start with the benefits, Caroline, and then I'll jump into kind of how we get to benefits like that. So we've been fortunate to be able to work with a couple carriers that have been in the process for a full deployment where we can see the impact of the platform. So if we look at first on a Markel, we've seen 113% increase in how much premium each of their underwriters are able to bind on their books. So 113% is double the premium that they're able to work on. So the capacity is being saved, and they're only focusing on the risks that provide the premium, and therefore they can spend more time on those as well. Another one, earlier I mentioned turnaround time. For Allianz, what we've been able to do, it's a global rollout, so therefore the turnaround times, we could see them reducing from 3 days to 4 hours. So again, significant reduction in when it comes inside the door to when it leaves back to the broker. So
I would say that's pretty significant.
Yeah.
And I didn't mean to jump in, but I will, because I know projects that I was working on, we heard the turnaround time was as long as 3 weeks for small business. This is small business. We're not talking about complex risks. And what that meant was 2/3 of the time, the underwriters weren't even actually getting to see the proposal, the submission. So you know, just to kind of go back to that, you're taking it from 3 days to 4 hours. That's just astonishing.
Yeah. And to the kind of type of business, the examples I'm providing are more middle market. There are large commercial, but even in small business, independent of the area, I think the broader point is that there's an opportunity here for any size of business that you're working on, right? Because either leveraging data through someone like a Viridian or automating, digitizing the workflow from when it comes into the door. And so when we talk about these digital risk flows and this operating model where our underwriters are only focused on the risks, we break that up into kind of 3 different areas, because each of these have to be custom. And the first one is what we call digitize. So digitize the risks as they come in, getting rid of that manual non-value work. Now, this is the foundational step where all of the extraction work that underwriters are doing today, picking through like 50 to 100 page proposal forms and trying to find how often a cyber risk had multi-factor remote access, or how often this property in the SOV had the right residential score. All of that is that digitization. And that's where we work with partners like Viridian to be able to pull in data that's necessary to make it a full digital risk. So once you have that, that's the foundational step. The second of the workflow is, how do you evaluate? Again, everybody's evaluation criteria is unique to the carrier. It's unique to the insurer. It's based on their risk appetite, their portfolio strategy. So for example, now that we have, let's say, a NAICS prediction from Viridian, and we have all the data pulled in, you're able to automatically apply rules to this digital risk. So if you look at a statement of value, for example, where you have multiple different properties, you're automatically extracting them, classifying them maybe to an internal taxonomy that the carrier has, additionally pulling some sort of data from an external source. Point being, by the end of it, in minutes, the carriers know if this is within appetite or not within appetite. So you have effectively evaluated after you digitize. And the last piece I'll say after it's been evaluated is, now that it's in front of the underwriter, how do you provide more decision insights so it accelerates the review process for the underwriter? And this can be several things, right? You could look at it in a simple way of, underwriter, here's something that is abnormal to the historical submissions I've seen, like a flag, or something that's a bit more complicated or complex from an analysis perspective, right? So instead of showing the SOV, I said a list of properties, here are the 100 properties. Instead of saying that, saying, oh, here are the 100 properties distributed by the occupancy taxonomy that you showed us, right? So it helps the underwriter go through it much, much faster than they would typically do that.
So they can really focus their time on the task at hand. So they've streamlined the workflow. They've identified the risks associated with that particular risk. They've digitized all of the data enrichment solutions. And that allows them to spend more time on the important task, which is the true underwriting task. The rest of it is primarily validation.
Yeah.
So Drew, that's actually an interesting opportunity for us to throw this back to you. So, we've talked about the digitization of the workflow and the data enrichment solutions, but, the quality of the data is really relevant here as well. And from your perspective, and it's beyond just the data, it's the validation of the data and the quality of the data. How do you see the quality issues being managed around the data validation? I'd love to have your perspective on that.
Well, we see all different approaches being taken. Of course, it's an industry in transition. You see legacy practices using legacy data and what impact that has on their business. I think you mentioned earlier, Caroline, even small business underwriting decisions taking weeks, not minutes or seconds. And so I think that gives us a good understanding of kind of the array of practices that exist across the whole industry. I really like what Zahir said earlier, though, about digitizing the experience. I think for us, what really matters when it comes to driving results is getting the data as close to the decision and the rules as possible. So what's here described is a workflow that the carrier can build out, their preferences to bring their rules as close to the decision as possible, if not embedded in the actual workflow. I suspect that's what he's referring to. So in our case, getting the data at that point of access, getting the freshest, richest data, not just our third-party data, but a combination of first-party and third-party, possibly a lot of different sources, making that decision as rule-based, as comprehensive, and as confident as possible. That's essential to kind of modern decision-making and creating modern experiences for all the stakeholders associated with it. Now, of course, managing risk sometimes doesn't go hand in hand with speed. So the other thing that data we have to consider is the data robust enough to allow us to to work within the known risks, to work within an acceptable level of risk. And this is where data is getting a lot smarter. I mentioned earlier that industry classification is as and remains so important to define risk profiles. It's part of validation. What's changed, though, is that industry alone cannot capture and characterize all of the risk associated with a business. Cyber threats are horizontal in nature, as one example. So we need to be looking at the most accurate way of classifying, because a lot of our risk models are still based on that. But the carriers also need to be thinking about risk characteristics that cannot be defined by the classifications. And that's where AI-powered data can really help about understanding characteristics that, again, don't fit the norm, don't fit a nice, neat, tight taxonomy.
I'm making notes like crazy here. So what I've heard so far from both of you, which is, and there's a question coming up, but what I've heard from both of you here is some interesting numbers. So here it talked about 113% lift in premium. That's pretty significant. Turnaround time, 4 hours, from 3 days to 4 hours. We've talked about automating the underwriting rules, leveraging the data enrichment solutions. And I love Drew's line of the data is getting smarter. And I think that's really the power of AI and the natural language processing and all of the really smart data scientists digging deeper and deeper and deeper into understanding the risk hazards that may not be so clear from a straightforward application process. Another area that we're looking at is cyber. And cyber isn't just about cyber. It's about all of the other things that can actually drive loss or risk to a business, for example. And how do we understand that? And, this risk characteristic thing. So that's what I was doing. I was writing these things down so that I didn't miss them. But there's a question here which might be a good time to bring it in, and then I want to kind of go back to this discussion about the collaboration between Cytora and Veridian. And the question's from Gaurav. I hope I've pronounced your name right. Drew, can you expand on industry classification? Because I was actually going to ask that question. This is why I'm happy to bring it in here. What it means, and how this data helps Cytora give better industry classification to their customers.
Yeah, thanks, Gaurav. Thanks, Caroline. I'll make this quick. It's actually it's a very sort of traditional topic. Some might say very straightforward, kind of very linear. But what's happening is businesses themselves are changing. There's a lot of existential change happening. If you look up in traditional taxonomies, I'm talking about SIC codes or NAICS, they didn't anticipate a modern digital economy, period. Try to find a good definition of what a SaaS company does in one of those taxonomies. There's not been a lot of evolution and progress and innovation in the taxonomies themselves. So if you're still using those taxonomies, you have to understand how much of the economy that I'm now serving doesn't actually fit well into this taxonomy. Crypto, Bitcoin would be other great examples. Different areas of professional services. Technology as a whole is generally defined by IT as a practice, and then hardware, and then some software, but it hasn't remained modern. So the trick is to use a lot of different language models, a lot of different AI capabilities to understand and triangulate what are the real characteristics of this company, what's the best place to classify them. So that's a modeling exercise, and there's details about how well models work, and the good news is you can test them. But the bottom line is, don't assume that the applicant or broker has given you the whole truth, and look for ways of supplementing that as step one in your underwriting process.
So really, it's about knowing the questions to ask.
And knowing what the options are out there. What does better look like would be another way of saying it. But you're exactly right, Caroline, is do the diligence. Don't accept what you traditionally have accepted, because you're likely to uncover risks perhaps that you didn't necessarily uncover the old way, so to speak.
And sometimes that's considered a bad thing. I actually don't think it's a bad thing, because underwriters and brokers want to understand more fully what the exposures that are facing their clients. And that gives them the opportunity to be able to offer full range of opportunities for coverage, so that the insured then has the choice to make as to whether or not they're actually going to insure against those risks. So from a broker's perspective, it's protection against E&O. From an insurance company's perspective, it actually allows the insurer to see trends in the way business practice and businesses are changing over time, so that they can pivot and expand their offerings to meet those needs. And then there are areas that become highlighted that are just way outside the risk appetite for that particular insurer. But there are many solutions for insuring those risks. And there are markets for pretty much everything. So the classification piece is really interesting. We know that sometimes people just get lazy. If there's a drop-down box picking a classification code, they just either that or they just don't know how relevant it is for whatever reason. So being able to cross-check against classification codes and predict other areas of classification that apply to that business really helps.
Yeah.
I'm hoping that answered Gaurav's question around the industry classifications. It's a big one. It's really critical. It drives, and in fact, back to you, Zahir, it drives everything on the workflow. Maybe you want to highlight that.
Yeah, first, to what both of you are talking about, it's complicated, right? Because industry classification is no longer no company does one thing, right? So oftentimes industry classifications also come into several different areas or different buckets. But to the latter half of the question about how does it help Cytora? So in that same digitize, evaluate, decision framework that I laid out, when you get to the evaluate, and if you're able to pull, you'll usually get a business description in the document. So being able to get a business description and being able to match that with what an industry classification was from like a player like Veridian, the underwriter, if it isn't an obvious match of equals, can at least look at it and sanity check pretty quickly that no, they claim they were a contractor, but when I look at the description, they're a restaurant owner. Whatever, maybe that's not the best example, but the broader point is you can quickly identify it and therefore save underwriting time to not have to go Google and try to figure it out by the first 5 or 10 results pages, right?
And we know how long it takes to actually do the Google search. You know, it's 4, 5, 6 minutes per thing to find. You know, Drew, you and people like you are working with so many technology companies and directly with insurance as well. And everybody's looking to leverage third-party solutions. So, you know, what does that mean? Third-party solutions, build in-house. We hear some companies want to build in-house. So all of those things make sense. So, you know, depending on what the opportunity is for the carrier, for the tech company that's serving the carrier. But as we hear all of these discussions around the automation and the data feed, maybe we can start the conversation in a slightly different direction, which is what both Cytora and Veridian have learned from the market, and what are the advantages of the collaboration between both of you, and what your customers are saying, and what we see as their desires moving forward, because it's still early days in this journey towards full-on automation of commercial lines.
Yeah, Zahir, if you would like to take a crack to start, I have some thoughts as well.
Yeah, happy to. So I'll start at what's successful, because it's helpful to back into the data piece, the extraction piece. What we notice on the players that are successful is how they approach and tackle this problem, right? If we step back, the broader ambition here is to be able to streamline, to be able to what we're calling digitize, to be able to move faster. So the question should be, how do I, what is the business impact I'm going for? Not how am I going to force feed the Gen AI tech that I have right now, or how am I going to force feed this data into the process? It all should start from the outcome. What is the clear target state vision of what your workflow will look like and how that will unlock value? Now, once you have that outcome, and that could be freeing up capacity, like I said, quicker turnaround time, auto adjudication of claims, whatever it is, then you ask the next question, going from the right to the left, of what are the enablers to make that outcome happen? And those enablers are things like the Cytora platform, or pulling a NAICS code, or some different data service, right? So even the data that you will pull from Veridian or any other player for that matter will be based on what you're trying to quote, what you're trying to figure out, what you're trying to bind, the objective that you have, the outcome. I think sometimes folks get stuck in the technology focus where they say, I'm going to build all of this in-house and solve for the perfect 100% of that one technical component of the entire solution. When in reality, getting to 100% extraction or 100% NAICS code identification through a Veridian isn't necessarily going to translate to the 113% improvement in underwriting premium written, right? Even an 80% impact. So I think all that is to say is, figure out what your objective is, what the outcome is, and then work back from there on the enablers. And that's where things like data will come into play, of how data is going to help the workflow, how Gen AI being able to automatically extract and evaluate and get decision-ready quotes to the underwriter.
Yeah. I really like the way, Zahir is talking about defining the business purpose, defining decision-making processes, and what the business outcomes ultimately are. We find often that clients, I'll reference this again, our clients are all over the spectrum in terms of the degree of digitization that they've gone through. Recently, we were meeting up with a large UK P&C insurer, and they talked about the extent to which they had automated their rules, and it was quite impressive. So just thinking about conversations we've had with carriers in respect to the degree of automation that they've undertaken, and where and when looking at additional data sources makes sense. And I can think of two kind of extremes that we've talked to recently. One was a large UK P&C insurer who had 4 SMEs automated a massive amount of rules already. They were well down the path in terms of confidence around automated decisions, but they realized they had hit a wall in terms of being able to have enough information to take advantage of the tech stack, the workflow, the design, the business rules that had taken place. So the mandate was clear around the things that Zahir was identifying. I think they had a good sense of what kind of business value they were creating and why they were doing this. And they, as I say, they were well down the path. But new data can spark opportunities to create new decisions, and in turn drive new processes. Without the data, you can't have a process to make a decision. And so the two work very closely together. So we see a lot of evidence of where, again, data is becoming smarter, to use my previous expression, and carriers are looking to continue that journey around automation. A great platform like Cytora gives them the ability to have the right tools, and we are, I think, a great source to plug into all of those capabilities. The other flip side of it quickly is situations where a carrier has used a data source. They've used a single data source, and that data source, if anyone wants to look me up in LinkedIn and see where I used to work, you can guess who I might be talking about. But that data source effectively underperformed, radically underperformed, and in a direct to SME channel generated only 15% match rates or hit rate against the inbound applicants. You can imagine in an environment where there's a promise of a digital experience, if you can only match 15% of data and 85% is being shipped off to your CSR team to validate, it creates some really significant operational problems. Your brand promise has gone out the window, your conversion rates suffer, and the overall business purpose, back to Zahir's thesis, that business purpose fails, where there's been a lack of clarity of bringing all of the pieces together, tech stack, the platform, the decision-making, the automation, the experience. And so these are the two examples I'll use, Caroline, to show where, data can be a critical element, sometimes very strategic, other times more tactical, but it still has to be there as part of, we would argue, as part of the formula for great decision making.
So it gets back to the point of, what is the problem that you're trying to solve? Do you have the right tools to solve those? And sometimes the tools are very helpful. And what I'm seeing at this time in the insurance industry specifically is that the technology is there, the knowledge is there, the desire is there to streamline and digitize workflows, not just because it makes, a customer experience is really, really important to an insurer, but an insurer is really focused on ensuring that their people have the best possible outcome and success. So for them to actually be able to do the job that they're paid to do and learn and grow and do exciting things is also a very critical part of the process. And if you have these scenarios where, all these pieces slot together very nicely, then clearly as a business, the insurance company will succeed more fully and become more profitable. Sometimes there's obstacles to that. And the obstacles so everything that's happening internally is fantastic for the insurer, but some of the obstacles are, how do you do business with the people that you need to do business with? So you're insured and your brokers. And there's a lovely question that's just come up that I didn't see when I was asking this question, but it's so timely. Question is from Clinton. Hi. Hi. Can you explain for commercial lines, where and how do you work with broker systems? So we'll take Zahir first, and then we'll move to Drew.
Yeah. So we actually work with the carriers. So the brokers reach out to the carriers, and we are sitting, conceptually think of it as sitting right at the front door of the carrier. So whatever the broker sends through, even if it's a system where they've standardized the template, in many cases they haven't, because that's the complexity today is there's variations of the way brokers reach out, because there's a multitude of brokers. So you have different forms, different formats, different product lines. So we'll sit at the doorstep of the carrier ingesting whatever comes in. It doesn't matter what structure or format it is in.
And before I hand this back to Drew, I'm actually going to add some content here as well. I worked for a vendor in the broker management space, and the journey for automation of the internal workflow within the broker office is equally as challenging as it is outside for the insurers. And then how do those two organizations communicate together? So again, getting back to this support of the data and support of the workflow, brokers will go to the carrier who is the most efficient, the easiest to work with. They are just as much looking for a customer experience. In lots of ways, they are the customer, and they will want to collaborate and work with insurers who have just a better mousetrap. And Drew, you've had some conversations with vendors and other organizations in the brokers area, and brokers too, quite likely. And what are you hearing from them?
Well, I think the most common theme we hear is an awareness of, well, I think there's two sides to kind of broker discussions. Brokers, of course, are in the business to sell, so becoming more proficient at targeting and using information that combines a prospect universe with characteristics that carriers find attractive. There are data solutions out there, including ours, that can help you do a better job of prospecting and finding new business. At the same time, to take care of client relationships, look for opportunities to grow. Once again, you can use data to help enrich your understanding of current customers. I would say in general, and it's a generic answer, Caroline, apologies, but I think the awareness of risk is growing through all circles. We see it in conversations with MGAs, the specialists, obviously. We see it in the case of brokers, carriers, and reinsurers. So to us, being relatively new to this industry, it seems that risk is flowing, of course, throughout all the channels. We're certainly in early stages of growing our partnerships with broker management systems, and in finding our ways to make our data more accessible in the industry. But overall, I would say for brokers, we help them identify characteristics for current customers as well as hunt for new business.
And I don't think it's any secret that connectivity between insurers and brokers is a big passion of mine. And the technology is there, and the appetite is there for all of the businesses to just make life easier for themselves and just work better and provide a better experience for the end user, the end customer. They're not an end user, they're an end customer. And I always like to remind us in the industry, we are our own customers. We all have our own insurance needs. We all have our own, we are the buyer. So what do we expect from our vendors and our providers? Question for Zahir from the chat. I'm just going to do a time check. It is probably 20 to 1, 12:40 in Eastern time. So we'll take a few more questions, and then probably what we'll do is give people the rest of their 15 minutes back. But Zahir, the question here is, you talked about putting only the risks in front of the underwriter, which pass the rules that each carrier has. So this is the triage process. That's what I would call a triage process. So for filtered risks that are now in front of the underwriter, do you provide an underwriter-facing chatbot, which does the quoting work for them? That's the question. I'm not sure I phrased it quite right.
Yeah.
Maybe you could answer that.
Yeah. The short answer is we don't do chatbots. I think not to be too controversial, but I think chatbot is the easy way out for something like an automation digitization. So going back to what you're solving for and the business problem, you look at today's process and understand how submissions are coming in and what underwriters are doing today to automate. So the ideal way, and because it is quite complex, right? So you're not talking 5 data points, right? You're talking 20 on triage, sometimes 50, 60 different data points when you want to automatically quote. So when you have something like that, the last thing you want to do is create, although a chatbot is smarter nowadays with Gen AI, there's different ways that we leverage Gen AI, LLM tech to be able to facilitate the process. So I'll give an example. What we do is what we call it schema-driven extraction. So, and that schema includes internal, external data points. It doesn't matter, but it says, these are the 30 data points that I care about. So for each of those data points, we'll create a plan of how to get that. So ideally, the first step is you look in the submission and you're able to find it and train and tune the models as necessary to be able to automatically find it. But if not, that's where you can leverage third-party data. I think the broad point is how do you, within the way the underwriter is working today, be able to pull the data and be able to help them train the LLM itself to be able to tell. When I say train, it's being able to say, yes, that's the type of question I'm looking for, or no, it's not. Just a quick example. So when we look at MFA for multi-factor authentication for cyber, right? So many of the carriers will have a question on multi-factor authentication for remote access versus admin access versus email, right? Or web access. Those are 3 different variations for the same type of question. But what's more important is, it's easy for the tech to be able to find, Cytora will find the different candidates, for lack of a better word, for that question. But what we expect the carrier to be able to do, and this is the SME or the underwriter to be able to say, yep, this is, when I say MFA for admin access, this is the type of question that I'm looking for that you found. So they'll essentially hit an approve or an accept, and that will ensure that the next time something flows in similar, we automatically detect it.
So this is this whole triage. We're getting back to this triage process and really spending the time focused on the risks that need the additional attention, which is actually another nice segue into the next question. And again, we're working with an industry that in many jurisdictions is highly regulated. And there are all kinds of rules and regulations around why they write certain business and why they don't. The question is, it's great that these systems are providing higher productivity, faster turnaround, and this is kind of the summary of what we've been talking about so far. So higher productivity, faster turnaround, better data-driven decisions. And the question from the audience is, what are the customers saying about the reductions in audit and compliance burdens as a result of these more efficient processes? That's a loaded question. So I don't know how we want to answer that. Who wants to take a stab at that one?
just have a light touch on this here. I think, one of the capabilities we have that doesn't always come out in conversation or demonstration is, the agility and flexibility we have to learn what compliance rules look like and how are they enacted. So there's often a series of questions. I think of the FCA in the UK. If I'm not mistaken, banks and carriers are faced with something in the neighborhood of 100, maybe 150 questions, for example. And this has to be operationalized. So what do we have? We have a new requirement to satisfy a regulator. It has to be operationalized through rules and hopefully a great platforms here.
Yeah.
And then we have to answer questions, and there's language. And so we have, with the beauty of AIs and against this, we have a large data asset. Can we train that capability of that infrastructure of ours to go out using language models and identify the answers to the questions in the FCA questionnaire? We absolutely can. So can't get 100% of the way there. You need human oversight, number one. And some of the questions are just complex and obtuse. That said, we can get them a long way there. So this idea of training data, training capabilities versus using the same old data I've used for 20 years, those rules are kind of broken now. And you can support the burden of compliance and audit by automating it using a data source in part. But that won't do much without a good workflow tool and without a platform. So those are my thoughts on the topic. But it's becoming,
as I said, loaded question.
Yeah.
I think I'll add one more point because all of that is spot on, right? Is you're not changing how the underwriters or the actuaries are deciding how to write the policy. What you're changing is the streamlining up to that point, and what you're adding is transparency. Right? So it's only a benefit, right? So today, if you look at the typical kind of beginning to end process, you have lots of gaps on what's captured and what's not captured in systems. So if I look at it from the binding side, you have to capture that in a system. If you look at it in a quoting side, most of the time it's captured. If you look at it at a submission intake side, sometimes it's captured. I would actually say likely not capture that often. But now, if you have a tool that's a workflow tool that digitizes it like Cytora, across the journey, you know what data was pulled out and where it was found, et cetera. So all of that metadata still exists of, we found this data point within this submission at this point. We got the other data point from Veridian and they got it from here. So all of that just improves the transparency from end to end. So I think it's only a positive versus any potential implication for a downside.
I think both of those answers are just great, and thank you for the question. That's a challenging question for anybody to answer in this industry. And we know that certainly insurers and reinsurers are looking at compliance and regulatory overload in a big way and are looking for ways to ensure that they meet the needs of the regulations. It's very important in the business, and it just makes for better business practices. We're getting up on time. It's I'm always watching the clock on these things. It's 10 minutes to the hour. I think we might call it there. I'd like to remind everybody that you will receive a link to the recording on the video, and I encourage you to share it with people in your circle who are interested in this topic. We hope you've learned something today. I know I have. There's lots going on in the industry. Before we end, I'm just going to kind of summarize the stuff from my notes, because I just keep going back to these notes, and it's, premium leakage, proper risk assessment, efficiencies of turnaround time, understanding the data and the risks that are applicable to businesses that may not be obvious or you're aware of. And, basically the triage process is anchored in higher quality workflows, higher quality decision making. Before I say goodbye, Drew, Riaz, or Drew, Zahir, do you have anything else you'd like to add?
Zahir?
I would say if you haven't started down the journey, start now. I think, Caroline, you mentioned it earlier. The discussion is no longer about the tech. The long pole in the tent is the internal work to bring everything together. Find a spot, focus on the status quo and get started, and then you'll iterate to the right answer that you want.
Couldn't agree more. Drew?
I absolutely like the what's here is recommending pick a starting point, start changing. For us, treat data as a strategic asset. You need to be building up insights on businesses, of course, above and beyond what you have in a policy document. And there are ways and means to do that. We'd be happy to be part of that discussion.
And I'd like to thank both of you. I was so excited about this discussion today. I knew it was going to be a good one. I knew we were going to get some tough questions from the audience, and I've learned a lot, and I appreciate that. Thank you so much for your time. And we'll wish everybody a happy afternoon and evening wherever you are. Thank you for your time joining us. Appreciate it.
Thank you, Drew. Have a good
Thanks,
one.
Caroline.
Bye, everyone.
Cheers.